Hello, this is Patrick White from AA Commodities and Investments with your Sunday night edition of the market recap. It's Sunday night here about 9:33 p.m. It's June 30th, 2019. We've got corn fractionally higher here. We had a gap up on the overnight here, up about 4. September corn is up 1/4 cent at 4.25. August soybeans are up 5 1/4 at 9.09 3/4. That was also a gap higher. And September Chicago wheat is down 1 1/4 at 5.26. I'm going to go ahead and get it into the disclaimer here. Just remember that everything I say here is not a direct trade recommendation, and there's significant risk in trading futures. Anything that I say here is just my opinion. If you would like to read the full disclaimer, please pause the video now. All right, guys, so as you can see here, we're fractionally higher on the overnight in corn, higher with soybeans, and a little bit lower for wheat there. Just really kind of a reaction from the quarterly stocks planted acreage report there. Friday came out at 11 o'clock, U.S. quarterly stocks. We had wheat coming in at 1.07 billion bushels. That was versus the 1.1 billion estimate. There's a lot of wheat out there. This didn't really shock traders a whole lot, but just confirming what we know. Corn came in at 5.2 billion bushels versus the 5.33 billion bushel average guess. That was just for more disappearance and stuff. There's a lot of cash corn that's been moving and a lot of cash corn that's been used. So, soybeans, they were at 1.79 billion bushels, and that was a little bit below the average of the analyst estimates there. One thing, to note, the on-farm stocks for soybeans were raised about 94%, according to the USDA, from year over year. So, there's a lot of guys holding over soybeans on their farms. Obviously, by and large, the quarterly stocks report was shook off by the traders. Obviously, the big mover here was the U.S. plantings of major crops here. The corn number came in at 91.7 million acres. That was well above the 86.6 million acre average estimate there, and the high guess was just 89.8 there. So, just way above what traders were expecting, and that's why corn touched the limit lower. So we were down as much as 25 cents there on Friday. I think it was just a combination of a couple of different things. I think the USDA, I don't think they were lying. A lot of people saying that they were lying. I don't think they were. I think they were reporting what their survey said, and at the time of their survey in May and June, farmers really didn't know. They thought they were going to plant more corn at that time, and they didn't really know the brunt of the weather issues. So I think it's a truthful survey, but I think it's just delayed. I think it's just a dated survey there. So, obviously the full brunt of the corn issues weren't realized at that time. Guys were still planning on planting corn versus soybeans, just because of the lower soybean price there. And that's why, we had the USDA come in at that 80 million acres for soybeans versus the low guess of 81. And that rallied the market pretty good there. So I think the USDA did report, accurately what their survey said. It was just the fact that it was dated information. There was just a lot more of a weather issue after the fact of their survey. So, I would argue that the acreage question is a larger question from Friday. So going on in here with your technical look here, this is the September corn market. Obviously we fell off on Friday there. We went down and we touched near the 420 level. I would argue that this 417 to 420 level, kind of where we stabbed lower here in early June, I would argue that that's good support. We do have a gap level down here at like 412. And I'm also looking at this high over here that we made in August of 2018 in the September corn market. So I think that basically between 417 and 420, we're probably going to find a base of support. If we break that, we're probably headed down to 408 to 410. In my opinion, the weather issue is not over yet. We're just taking a breather, so we'll see how far they want to stab this thing lower and see where the retracements are. I would say the 417 to 420 level, if we can hold that this week, that's a pretty decent sign that we might go back up and test the 445 level there. Going on into August soybeans here, we had a gap up on the overnight. Really just this last, since mid-May, we've had this nice uptrend here. I'll make that a little larger for you. I had this nice uptrend since the bottom on May 13th. We bounced off of that here earlier this week at 890. I would argue that this support in here is between 890 and 895, and that corresponds with these highs that we saw over here. They tested that level 1, 2, 3, 4 times before breaking through it. So, I think we have good support at 895. We also have good support at this trend line. And the area that they're going to look to break here is the 923, 924 level that we've tested about 1, 2, 3, 4 times or so again. So, going on in here to September Chicago wheat. Really the wheat market has been a follower of the corn market. The quarterly stocks report and planted acreage report was pretty much dead on what the traders expecting, besides the quarterly stocks being lowered. So it was, a mildly bullish report for wheat, but they just could not handle corn, going lower. So, obviously, like wheat at these levels is really not justified from like a world demand perspective. It's just following corn. So it's justified from a feed perspective, but not, we're not, certainly not the world market for wheat. So, with that being said here, we had the wheat market go up and we probed the 550 level 1, 2, 3 times. We failed off at that. And so, now that we've sold off, we've got support in here at this 520 mark, and we stabbed lower there, in mid-June there and rallied off of there. So I would say the 520 level is good solid support here for the September Chicago wheat contract. If we break 520, we're probably headed down to the $5 mark, and we've tested that level 4 times as well and come off of that. So with that being said, if we can hold 520, that's probably largely going to depend on the corn market. If September corn can hold 417 to 420, if we break that, we're probably headed lower in corn. We're probably headed lower in wheat as well. So a lot of things to watch here this week from a technical perspective. We've got some I would argue some pretty important support lines. So that's all I've got for you. If you guys have any questions, feel free to give me a call at 712-262-7606, and have a great week. Thank you.